I didn't start a business to become an accountant in need, somebody will say. And for us that are already accountant or accountant to be, we are actually better positioned, because in the business world, you need to be financially literate, and that's the reason at the end of the day, the non-financial people find themselves going for executive finance for non-financial executives training, because you need to understand and speak the language of your environment in order for your environment to absorb you and to be better integrated. That is the truth of the finance world. Gbenga Olatunji FCA is my name, welcoming you to the dictionary of financial terminology. Financial terminology, the basics actually. We'll be looking at it from A to Z as much as possible, but in this video we'll be looking at the A's, starting with accounting concept. We'll talk about accounting method, accounting policies, accusation, adjudication order, adjustment events. What does that mean? Amalgamation, associates. What are all these things? What do they mean in accounting world, and how can we apply the knowledge? When we are talking about accounting concepts, we are talking about a generally accepted assumptions. So they are assumptions, and actually they are fundamental too in accounting. They are accepted assumptions and norms followed in presentation of financial statements, and also they are expected to be disclosed. So that is accounting concepts, and we have a bit of them. We have like ACCA concept, which is talking about that when whether we've paid for an item or a service or good or not, once we've enjoyed the service or the goods, we should put it in record as an obligation. So that is accounting concept, talking about across. We have materiality concept, we have conservation concept or prudency concept, we have matching concept, we have accounting period, and some others. So this is about accounting concept. Is they are generally accepted assumptions and norms that must be followed when we are presenting an accounting financial statement. And that leads us immediately to accounting methods. When we are talking about accounting methods, we are actually talking about the medium through which the fundamental accounting concepts are applied or applicable to applied to our financial statements. We have accounting policies, and when we are talking about accounting policies, this method, now we are talking about accounting policies. When we are talking about accounting policies, we are talking about the basis, the rules, the principles, the conventions, the procedures adopted in preparing and presenting financial statements. And you know what? Accounting policies is a critical aspect of the work of the board of directors, of course, which could be delegated, because once accounting policies are established, they become law for that organization, and to change them requires another board level authorization, because it could be changed and approved equally by the relevant tax authority and other organs of governance and administration of business. Then we should talk about acquisition. Acquisition in the finance world, it simply means when an organization or a business combination in which one of the enterprise, that is the acquirer, obtain control over the net assets of the acquired, incurring of liability and also issue of equity or equity, as some of our people will call it. That is acquisition. And acquisition is so common in business, especially when businesses are trying to expand their territory and their horizon. We find that business combination and business acquisition is so common. Then we'll talk about adjudication or adjudication order. So that sounds like a bit of adjudication, a bit of law. Of course, there's a bit of law in finance world also. So it's an order of the court that declares a debtor to be bankrupt. So without an adjudication order, even though we may be privy that somebody could not pay for his or her obligation, or an organization could not pay, no one has the right to declare the organization bankrupt or anyone else unless it is pronounced by the court of law. So that the court of law, that pronouncement is called the adjudication order. So on adjudication, the property of the bankrupt becomes divisible. That is divided between those that he or she or the organization is actually owing. So among his creditors, and the title of the property becomes vested in the trustee or the bankruptcy for that purpose. So once an organization or an individual has been declared bankrupt, then he or she loses the right of ownership on the asset, and those assets or property will be transferred to a trustee under bankruptcy agreement or arrangement, for use of better word, and those people are empowered to sell or divide the proceed, make sales and divide the proceed of the property dissolved among those creditors and those one people that the organization or people, the person bankrupt is owing. Then adjusting events. Adjusting events. When we're talking about adjusting events, we're talking about some events that actually provide additional evidence on condition existing at the balance sheet date. We call them adjusting events. So also we have non-adjusting events. But when we're talking about adjusting events in particular, they must provide us additional evidence that they actually existed at the balance sheet date. Let's say our balance sheet year end is December. As at that December that we are closing the books of accounts, the adjusting event must have its existence. We must be able to substantiate it. If not, it's part of the criteria for it to become non-adjusting events. And for adjusting event, it simply means we are going to have its implication affected on the financials, that is financial account. While non-adjusting, we can only disclose them by way of notes, no need to actually adjust anything. That is why we call it adjusting event. I hope it's not too technical. We move on to amalgamation. Amalgamation. And when we are talking about amalgamation in finance world, we are referring to a situation where the company or the companies that exist separately under different ownerships and names and title decide to come together and combine and give birth to a new one. We call it amalgamation. That is, different organizations, for one reason or the other, for business purposes, who find a common objective to come together and become one. And when this happened, we said that amalgamation has taken place, or business combination has taken place. So they are initially separate entities, but they come together under one umbrella and under one ownership. They amalgamate or amalgamated. Let us talk about associates. Associates is a very common word also in the finance world. Actually, IAS 28 addressed this, and I like to buttress it by using IAS 28 as it says. So it's a company that is neither a subsidiary nor a joint venture, and in respect of which the investors can exercise significant influence and intend to retain its interest as long-term investments. So an associate does not necessarily need to be a subsidiary of a company or a joint venture. Later on, we'll go into the definition of this, but we do not want this video actually to be prolonged. So we've spoken about accounting concepts, we've spoken about accounting methods and accounting policies, we've spoken about acquisition, adjudication order, adjusting events, amalgamation, and associates. I want to believe if anybody asks you about what amalgamation is or adjudication order, what bankruptcy is, and what are the proceedings before anybody can call anybody or an organization bankrupt, now we know. It is good to be equipped with knowledge in the finance world. If not, so many things can go wrong. From Gigi's Associate channel, for those that are just joining, Gbenga Olatunji FCA is my name. We are going to continue the knowledge of our financial terminologies, and we'll look at what borrowing cost is. We'll look at what cash is, cash equivalent is, what cash flow is, what cash generating unit is, and many more. If you are yet to subscribe, please subscribe to the channel. Gigi's Associates, we are value to life, we are value to your businesses. Don't forget to share, to like, and engage us.